And yes, now that we go from that to this, meme stocks, here's where things stand. GameStop sitting at $53.99. It's up about 10% right now this morning. AMC up about 10%. SunPower Corporation has dropped about 10%, so watch that volatility. And our good friends at BlackBerry are up a little over 1.5% after what was a wild, wild ride yesterday. We'll talk more about that, the implications of it. Are we back? Are we back? It's like going in a time machine, the whole situation.
So GameStop's up, Sorkin, today.
It is, but not as much as what it was.
It opened at almost 65 yesterday, and it closed at 48.
It did.
So being up today, it gets it into the mid-50s. We still aren't hitting that crazy high that we hit yesterday. I'm torn. There's no doubt. I mean, I agree with you. It's like certifiably insane. But then there are people that write in, so you clowns think it's okay for the hedge funds to have naked shorts and do this and do that, but it's not okay when the individual investor decides to get involved and cause a short squeeze to these hedgies that are screwing us all the time.
This isn't even a short squeeze, and they're squeezing themselves. That's what we keep saying.
But there were huge losses in people that were short these stocks yesterday, almost a $1 billion.
It was very, very hard to borrow this stock, though.
Right.
Which means it's very hard
when you can do it naked.
Well.
I'm playing into all the, right? I'm playing into all the
whole idea that the little guy is somehow screwing the big guy.
No, the big guy's screwing the little. Oh, and now they're getting back.
And somehow, but the sad part is, the truth is, the big guy is still screwing the little guy, and the little guy just doesn't even know it. That's the problem.
Okay. Well, I just actually am throwing you some red meat. I don't even want to be involved, to be honest with you. Things are quiet right now.
Your Reddit account is doing okay?
I don't know about Reddit. I would never look at that. I just wouldn't. But my Twitter, my X thing is
your
okay.
X account is
for now.
For now. Okay, you keep watching that.
How about yours?
We'll see.
What is it, Andrew R. Sorkin?
I know I got some. Yeah, Andrew R. Sorkin, bring it.
Bring it on.
Bring it.
Bring it on.
The big guy is still messing with the individual investor, as Andrew mentions. With market makers doubling as hedge funds, these entities can inject infinite liquidity into the public markets while simultaneously shorting those same stocks on the hedge fund side of their business, effectively profiting off of their own depreciation of a stock's price. On top of all this, large portions of individual investors' orders are being routed to non-transparent dark pools rather than lit, transparent exchanges. And, as Citadel's Ken Griffin has previously said, money managers like Citadel are driving the prices of securities to where they think those securities should be valued. The public doesn't decide the prices, so much for a free market that functions on true supply and demand, because that is not what we have currently. According to Dave Lauer this morning, quote, ordinarily in pre-market trading we see most trading on exchange. Today that doesn't seem to be the case, with a ton of off-exchange trading happening in GME. According to the graphic Dave posted, 50% of GameStop's pre-market volume was off-exchange. The solutions here really are simple, but there are many entities who refuse to implement these solutions due to power, money, and conflicts of interest. These are some changes we need to see in the public markets. First, require that all of individual investors' orders be routed to lit, transparent exchanges rather than opaque dark pools. Second, prevent market makers from providing, quote, infinite liquidity, because any reasonable person can understand that there is no such thing as infinite liquidity, unless synthetic shares are involved. Thirdly, ban payment for order flow. It's already banned in many other countries due to the insane conflicts of interest it creates. And fourth, actually hold entities accountable when they fail to deliver on their obligations. No more slap on the wrist fines, actually hold them accountable. If these changes were put into effect, the markets would be much more efficient, much more transparent, and ultimately better for everyone. I'm curious to know what your thoughts are in the comments below. Please like this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.